On March 6th, one single word appeared in a BlackRock press release that sent their stock down over 80% in a single day. That word was gated. The same word appeared in a filing in 2007, which was 15 months before Lehman Brothers collapsed. The pattern is running again. It's the same, and almost nobody's talking about it.
On March 6th, 2026, BlackRock, the largest asset manager on earth, told investors in one of its biggest funds that they couldn't have their money back. Not all of it. Investors asked for $1.2 billion. BlackRock gave them $620 million. The rest, locked. Come back next quarter, maybe. The last time a major fund locked investor money like this was June 2007. Bear Stearns, 15 months before the worst financial crisis in 80 years. BlackRock's stock dropped 8% that day. Most Americans didn't notice. Most Americans have never heard of private credit, the $1.8 trillion asset class at the center of this. It grew from $200 billion in 2012 to $1.8 trillion today. It got that big because after 2008, banks pulled back from risky lending. Private credit filled the gap. 14 years of near zero interest rates made investors desperate for yield. These funds delivered 8, 10, 12%. Money poured in. Here's the one structural thing you need to understand. These loans can't be sold. If you own stock in Apple and you want out, you sell in 2 seconds, a buyer standing right there. But first you need to understand what private credit is, why every major fund in America just locked investor money in the same quarter, and why executives are using the same language Bear Stearns used. By the end, you'll know what to look for, what to do, and whether your money is exposed. Private credit is simple. A business needs a loan. Instead of going to a bank, it goes to a giant investment firm. Private credit doesn't work that way. The loans sit inside the fund. No market for them, no buyer on the other end. When you want your money, you submit a request and wait for a quarterly window. The fund caps it, usually 5% of total assets per quarter. If too many people ask at once, the fund says no. You get a fraction. The rest stays locked. That's dating. It just got used. Everywhere. At once. BlackRock, 9.3% wanted out. Gated. Apollo, 11.2%. Gated. Ares, 11.6%. Gated. Blue Owl's $36 billion flagship, 21.9% wanted out. Their tech fund, 41% tried to leave in a single quarter. Both capped at 5%. Gated. Blackstone's response tells you what the insiders think. They raised their cap from 5% to 7%. Then the firm and its executives wrote personal checks, $400 million to avoid the gate. $265 billion in market value erased. Apollo down 41%, Blackstone 46%, KKR 48%, Blue Owl 2/3 gone. Largest asset managers losing value faster than their borrowers. By September, Lehman Brothers filed for bankruptcy. The language executives are using now, resilient fundamentals, is word for word the same script. Now, the language. This is where the 2007 parallel gets specific. Blackstone's president blamed noise.
Hey, real quick, sorry to jump in, but this one's important. If you have just watched, or what you're watching is actually a sequence of events happening, if you're not sitting, or if you're sitting actually on home equity or any real estate assets right now, the real estate crash bundle shows you how to protect what you've got, what you've built, and how to come out ahead when the cycle completes. And if you don't own any real estate, this will teach you where you are in the cycle and how to crush it because of what's about to come. Links down below. It's 4 courses for the price of 1. Now let's get back to the video.
Blue Owl said underlying fundamentals remain resilient. Apollo says everything is fine. Don't panic. Jamie Dimon, JP Morgan CEO, said it about private credit defaults earlier this year. When you see one cockroach, there's probably more. Here's the cockroach nobody's looking at. In March 2008, 9 months after the Bear Stearns gate, the CEO said his firm's balance sheet was strong on a Tuesday. Bear Stearns was sold at a 93% discount 4 days later. Same words, different decade. JP Morgan marked one software loan to zero. Not down 10%, not 50, zero. The valuation methodology the entire industry uses was publicly challenged in a single write-down. Saba Capital just launched a fund to buy private credit positions at 35% discounts. When professionals line up to buy at 65 cents on the dollar, the fund's price is fiction. The gate is when it cracks. Buried inside insurance general accounts or blended into a target date fund you picked for the year. You can't see it, you can't price it, and if the fund holding it gates, you can't get out. In Canada right now, 40% of $30 billion in private real estate funds is gated. Distributions halted, redemptions frozen. The pattern is already crossing borders. Contagion follows the plumbing. Is 2008 about to happen again? The asset class is nearly $2 trillion. Subprime was $1.8 trillion. Structural liquidity mismatch. Gates firing at firms supposed to be the smart money. Same signal. In 2007, the gate was at one firm. Now, it's every major firm. Exposure is deeper because private credit spent 14 years embedding itself into products ordinary Americans hold. Pressure is hitting a cracking industry. The signal that preceded 2008, the gate, just fired again. Louder, wider. The people who recognized it in 2007 had 15 months to prepare. Those who didn't lost $8 trillion in wealth. From the Bear Stearns Gate in June 2007 to Lehman, 15 months. The BlackRock Gate was March 6th, 2026. The clock started that day. 3 things you can do this week. First, find out what's inside your retirement accounts. Call your plan administrator and ask specifically about private credit exposure inside any annuity or target date fund. Request the holdings disclosure. Ask. Second, understand the liquidity terms. If there's a quarterly redemption cap, know it before you need your money. The person who discovers the gate when they try to withdraw has no options. Plan around it. Third, make sure money you might need in the next year is somewhere you can actually reach it. Cash, T-bills, money market, something you can touch without asking a manager who might say no. Now, why this matters to you. If you have a 401k or 403b, there's a reasonable chance private credit is already inside your retirement account. Not labeled, not visible on your statement. If you own a small business, this hits you through the lending chain. Banks lend to private credit funds. When those funds lose value, banks pull back lending across the board. That tightening flows downhill. It flows into commercial credit lines, equipment financing. In 2008, the crisis started in hedge funds nobody heard of. Within 18 months, small businesses couldn't get a line of credit. The plumbing is the same. The systemic risk isn't just on Wall Street. It's in the insurance companies. It's in the annuities. It's in the foundation of your future. Don't wait for the next announcement. Check the foundation. The word is gated. It means your money is there, but you can't have it. It appeared in June 2007, 15 months before the worst crisis in 80 years. It appeared on March 6th, 2026, simultaneously. It's in the fine print. It's legal. The problem is that everyone, pension funds, retirement accounts, built their plans around the assumption the gate would never actually be used. The scale is bigger, the speed is faster. 2007 was a localized storm. 2026 is a global front. The plumbing is already shaking. Can you feel it yet? The clock is running. What you do in the next 12 months is yours. But the time to find out whether your money is locked is before you need it, not after. Look for the cockroaches. Prepare. Blackstone's response tells you what the insiders think. They raised their cap from 5 to 7%. Then the firm and its executives wrote personal checks, $400 million, to avoid the gate. Blue Owl's $36 billion flagship, 21.9% wanted out. Their tech fund, 41% tried to leave in a single quarter, both capped at 5. Gated. From the Bear Stearns Gate in June 2007 to Lehman, 15 months. The BlackRock Gate was March 6th, 2026. The clock started that day. 3 things you can do this week. The word is gated. It means your money is there, but you can't have it. It appeared in June 2007, 15 months before the worst crisis in 80 years. It appeared on March 6th, 2026, simultaneously. The clock is running. March 6th, 2026 was the first bell. How many bells do you need to hear before you act? The time to find out is now, before you need it, not after.